Hey everyone, Sterling here from Day Trading Forex Live. What we have is a chart, a 15-minute chart of the euro. It is September 25th, and looking at the euro, taking along here from 99. And the reason I'm taking it along, we had actually pulled back to about, let's see, what was the depth of that pullback here? We pulled back to 95 on the bid, and the reason I was taking the entry there from 99 was a pretty straightforward entry. Although ultimately I do have more of a bias down tonight, and that's actually what I'll be looking for, hopefully by the time the New York session comes around. With this pullback and entry from 99, that's going to allow enough of a move up. The manipulation point I'm looking for on the euro is up around here between the one spot 29.70 to one spot 29.60. Really this 10 pip range here, and so I'll kind of draw that out. But that's the rough range that I'm looking for the market to come into to begin looking for the manipulation to sell from. The reason I'm taking this long, first and foremost, I'm going to ask myself is, does the risk reward allow for at least 2 to 1 if I'm taking a counter trend trade? And in this situation, with an entry of 99 to the start of that manipulation is 60 pips. Now from here, 99 is going to be able to I'm going to be able to put my stop at 77, and that's going to allow me to cover the lows of the stop run. And so as long as I'm able to get my stop below the lows of the stop run, then I'm comfortable doing that. Again, we don't want to put our stop below the nearest low or above the nearest high or the last high or the last low. That's a very dangerous spot to put your stop. If the last low or high was the stop run, however, that's a safe place to just put the stop. And the reason behind that, you got to think about from a logical standpoint, it costs money to move the market. Therefore, if they've spent the money to drive the market into and beyond this previous low to gather the stops, that means they've already taken the stops. That means that more than likely the stop run low, and that's why the stop run low or high always holds, because that's the last point that they've taken out the stops. They've already spent the money to go get the stops. More than likely they're not going to do it again. Generally, and one good rule of thumb I say in the room quite a bit, is you often do not see a stop run on a stop run. It's a pretty good rule of thumb. Will you see it from time to time? Of course. There's no absolutes in trading, as you guys well know, but in general, you don't see a stop run on a stop run. So with that being said, with an entry of 99, it allows my stop to get well below this past low here, or past the stop run low. And as we go back over to this is the 84, that red line there, so you can just you can see my stops well below that point. In fact, it's let's see here, would be 6 pips, actually no, 7 pips below the current low. But the reason here, pretty straightforward. We're seeing a nice single pin that came down, took out the major lows we have on the hourly chart. It's even more visible. We'll go out to the hourly real quick. And as you look at the hourly, you can see that that low is obviously the low that we have set, and we took it out very clearly. We took that low out, and again, going back into the 15-minute, rejected very nicely, came back up, closed as a nice reversal candle, and we're starting with the London session now. So starting with the London session, we're starting to see somewhat of a pullback. Very typical to see that manipulation at the beginning of the London session. So it's a good entry point. It's again below my entry point. Could get a little bit better here, but I thought 99 was good enough, as it was covering the last stop run lows by at least a couple pips. So what we'll do is we'll let this trade continue to run, and we'll come back here for the start of the New York session, and we'll see what has transpired of this euro. Hopefully we'll have worked into this zone. As of right now, I do have my take profit set at 2 to 1. And I'm going to be leaving it there. I'm not going to try and really stretch this trade out. All I'm going to do is look for 2 to 1. And that's going to set my take profit at 39. So I'll bring this line down here. And 39 is relatively low. Even just a retest of those highs is going to be safe. But here's 39. And what I'm going to do is just leave it at 2 to 1. And we will come back for the conclusion of this trade. I'm not going to try and force it. We'll set that at 2 to 1. We are against the overall smart money trend, but I want to at least capitalize on this move, because I think we will at least see 2 to 1, and then possibly we can get a video as we come out of the short. That should be what smart money does. They'll should drive it into this area of supply up here, and hopefully we'll get the manipulation to take the entry short for New York. So we'll be back for that. I will see you guys a bit later today.
Alright guys, we're back. Coming back actually a couple days later. I forgot about the conclusion of this video, and I was getting up another video, which I'll be posting here shortly. And I realized that took the entry video to this and never finished up with a conclusion to it. So I wanted to go to the conclusion of this trade. And you can see that it did come up after the original entry. We had a nice stop run on the previous lows that day, back on the 25th. Very nice stop run of those lows. Had an entry of 99. The entry of 99 was right here. So it did pull back against me a few pips. Pulled back once I was taking the entry at 99. You can see it pulling back against me in the beginning part to the video, and pull back against me maybe 5 or 6 pips, maybe 7 pips at tops as far as that one is concerned. But it was a great stop run, and ultimately, if you remember from just a minute ago, we were talking about the point that we expected the market to come into, and really the belief there was, I was taking this long in expectation that we were going to be coming into these highs between 60 and 70, and these two red lines represent that. We actually took this short in the room. Unfortunately, I ended up with a 10 pip loss. The reason I took a loss in this trade initially, as you can see, it worked out really well. But the reason I took the loss on that trade is because Draghi was speaking. It was honestly a stupid mistake on my part, not paying attention to the news. Then I looked at the news, saw he was actually speaking, and from my point of view, I just didn't feel like it was worth the risk. So it was, as I said in the room again, it was a great trade setup. From these highs to take the short would have been a great, another great trade, and would have been a plus 40 trade as well. But in essentially just breaking down the reasoning for that trade, we were seeing a stop run above the previous day's highs that was getting rejected right in that 60 to 70 range. Again, putting it up there right in the center of that range. So that's where I was looking at. That's where we expected them to drive the price based on the smart money strategy. And so when they went into that level, we took the short. And again, I took a 10 pip loss on that personally. I know a couple people from the room did hold that trade and did very well. For me personally, although the setup was exactly what I would want to see, that wild card of Trichet the wild card of Draghi speaking was just too much, especially given the fact that they've been drumming up the euro and been putting out nothing but positive remarks as far as the euro's concerned for the most part, and I just didn't feel like that was worth the risk. I really didn't want to give back 20 of the 40 pips I made off this original long, so I ended up plus 30 for the day. Not a bad trade, and overall pretty solid setup. It just shows the example of, we get a lot of setups that this setup was in the direction of the overall smart money cycle, but once you understand the strategy, you understand how smart money tends to run the price, you understand where they're going to go with the price. And once you understand that basic foundation, it opens up a lot more trades, and it opens up some counter smart money trend trades as this original long was. But that was a nice trade. Again, entry at 99, and the exit was up here right at, let's go to 99. So the entry or the close there was at 39. At limit was getting out ahead of any potential stop run at these highs, which eventually we did see up a bit higher. But nonetheless, very nice trade, and gave back 10 pips on this setup. So overall plus 30 for the day. So I hope this video is helpful, guys. As always, if you have more questions, feel free and check out the site. You'll see the link to the site at the end of the video, daytradingforexlive.com. A lot of other information on the site as far as in regards to the smart money strategy. A lot of articles, videos, recent trades, and other information that I believe you'll find useful if, in fact, this is your first time getting a glimpse of the smart money strategy. So, as always, guys, hope it was helpful. Until next time, happy trading.